Financial Issues. I'm Dan Celia. The Dow's down 202 right now. The Nasdaq's down 59. The Nasdaq's really getting clobbered. It's down 1.63%. So that's a pretty big number, 1.6%. So that's the Nasdaq. They're primarily the technical stocks, if you don't realize that, companies like Apple and Microsoft and those kinds of companies. And the S&P is down about 1.36%, a little bit worse than the Dow right now at 1.32%, or down 202 right now. So that's where we are in the indices, and I can't imagine, based on these numbers and some of the news that we're seeing, and based on the reason why these numbers are down, I can't imagine that's going to change the end of the day. Every time I say that, I'm wrong, but I'll say it anyway. It is very likely that we are going to see a fairly significant downturn. This is one of those days where if there is an uptick, you're not going to see it until 3:45 Eastern time. The last 15 minutes, of the trading day before you start seeing it move. The other thing that the last 15 minutes could be is a further push downward. So we'll have to wait and see. I mean, obviously there's a lot of selling going on right now. So the question is, if people start to think that, wow, this is down 200 points, maybe time to pick up some individual stocks and buys and maybe add to some positions. And we get a little bit of buying going on in the last minute once if they feel this is, run its course and tomorrow is going to be a brighter day. So we'll have to wait and see what the last 15 minutes bring. But I can't imagine, based on the information I've seen, that it's going to be very different. Oil is coming off its highs. It is at 107.12. It's still above 107, but it was 107.80 at one point or so. So it is down a little bit lower, but it really doesn't matter. 107.12, 108. It's kind of all. None of it's good, and until we see it in the 90s or ideally low 90s. It really doesn't matter. And a lot of this they're claiming has to do with the unrest in the Middle East. I don't believe that, and I haven't believed that for a long. I mean, I believe obviously that's contributing. I shouldn't say that. It does contribute to it. But the fact of the matter is, the reason why, and I've been saying this for a long time, back when oil was at 93 a barrel, that the reason that we are having so much trouble breaking 90 is because of the devaluation of the dollar. The real value of the dollar is devaluating as we continue to put $85 billion a month into circulation. And, it is devaluing the dollar. And that is one of the reasons, oil commodity being the first, that's really getting hit by that. So corn is up significantly right now. Corn is up 2.25%, and that is a significant move in corn. Wheat is up also. So natural gas is down slightly. It's at 333. Gold is down to 1325, and silver is sitting at 2185, up slightly. Let me go to Nancy. Nancy calling us from Texas. Hi, Nancy.
Hello. I have some stock, a GE stock.
Mm-hmm.
And I'm holding half of the shares, and the company have the other half. Should I put that all together?
It doesn't matter, Nancy. I would just. It's always easier to have it all in one place. It doesn't cost you any money to put it all together and get it in one place. So I would say that if you don't have any physical stock certificates, right?
Yeah, I have the certificates.
Okay. Yeah, I would like to see you then change the certificates over to what is called a street name, where you have it in an account. And I tell you that because, believe it or not, it's safer. Anything could happen to those certificates. It's not like it would be a total loss and you couldn't get that money, but it would be a nightmare. It's so hard to start tracing all that and going back. And I think it's much safer to have those in street name, it's called, and have them into an account. I think that makes a lot more sense. Okay. So tell me, you have some in the company, and then you have the other in these actual certificates?
Yes.
Is that what you have?
I have the certificates. I don't know how they holding it, the other half, but Mine is certificate.
So, yeah. So here's what you would have to do. You would have to have one or two things. You would have to ask the company if they would hold the certificates that you have along with what they're holding already. Mm-hmm. And I know they'll do that. And then they would tell you what you need to do, because on the back of each certificate, you have to sign it. And you may have to get what is called a medallion stamp on the signature, which means you'd have to go to your bank and sign it in front of somebody so that they can stamp it. And then you would send those certificates back to the company, and they will put it into your account. Okay. Now, if you don't do that, Nancy, make sure that you make copies of those certificates, and you have them the copies in a different place than you have their certificates, and you have them in a safe place. Okay. If you don't, go ahead and turn them back into the company. Okay?
Thanks a lot.
All right, Nancy. You're welcome. You're listening to American Family Radio, Financial Issues. I'm Dan Celia, 866-300-9298. Let me go to Dennis. Dennis calling us from Ohio. Hey, Dennis.
Hey, how's it going? You're talking about this inflation. Is it going to go crazy, like overnight, double or something like that? Because I've only got $20,000 in the bank, and I don't know if I should hold on to it or invest it.
No, it's not going to happen overnight. It's not going to be a situation where we're going to see double-digit inflation overnight. That's not going to happen. There will be some warning signs for sure. If your money is in a bank, in like a CD or a savings account, something like that, is that what it is?
Savings.
Yeah. I mean, it's you're at least you're not going to be exposed to the market, so you're not exposed to it losing the principal losing value. But no, it's not. You're going to be fine. And if the inflation comes in, how quickly it gets up to double digits, it may be relatively quick, but it's not going to be overnight.
Okay.
It's not going to happen that way. Yeah. So you'll have some time to react.
And will there be any problem getting it out of the bank if it does start going up?
No, it won't be any problem getting it out of the bank. But, if it really starts going up, chances are you're not going to want to get it out of the bank because the interest rate that you're earning is going to go up. So if you remember, I don't know if you're old enough, Dennis, to remember the Jimmy Carter years, but back in the Jimmy Carter years, there were people earning 17% on the money in the bank, on CDs and savings accounts. So, because inflation was so out of control. So if inflation really starts going up and your money is not going down as a result of stocks crashing, then you may want to keep it in the bank. You're not going to want to take it out because chances are interest rates are going to go up. The interest rate that you earn, that is going to go up. So, no, I don't think you're going to want to take it out.
Oh, okay.
Thank you. Sense. Okay. All right, Dennis. I appreciate the call. Let me go to Marilyn. Marilyn calling us from Oklahoma. Hey, Marilyn.
Oh, hi, Dan. It's so good to talk to you. I listen to you as often as I can.
Thank you.
My husband and I have modest investments, and I remember last fall, if I remember correctly, you advised people who had bond fund money to take a significant portion of that out and put it in a money market until the summer of 2013, which is what we did. Mm-hmm. Now it's the middle of summer, and so I'm wondering what the update is for us with that money.
Well, I'm really glad you did that because though you're not earning anything in the bank, you've saved yourself thousands of dollars. Well, I don't know how much you had, but you saved yourself an awful lot of money in losses. So that's a good idea. Now, I said the reason I said the middle of the summer because I said let's give it. I don't remember exactly what I said to you, but I'm assuming I said something like let's give it to the middle of the summer and see how it looks. Well, here it is, the middle of the summer, and it doesn't look any better. So I would say just sit tight with what you have, where you have it, until we see some sort of numbers that begin to make sense, that we can make some sense out of. Now, I'll say to you, Marilyn, the same thing I said to the last caller. So bonds, let's just say that the markets do begin to correct. We do begin to see the 10-year note rates continue to go up. We begin to see some inflation come in. Then you're going to be earning a lot more on that money that you have in the bank compared to what you are now. So the incentive might be to keep it in there and stay safe, or safe as we can be, if anything, safe, and stay safe until we see some reasonable to be able to make some reasonable projections as to where things might go in the market.
All right. So is it reasonable?
What's that, Marilyn?
Is it reasonable then to say we'll call you back in 6 months?
Yes. Or if you keep listening, you're going to know. I mean, you're going to know probably what I'm saying. But yes, I would definitely call back at the end of the year, and let's see what our take is on that at that point.
Thank you. Can I ask one quick other question?
Sure.
You were mentioning yesterday to someone about the Xander ID identity theft insurance, and we took out from our bank their ID protection service. But I am wondering your opinion on something like that, because I'm sure you know something about the kind of service that a bank would provide. And so I'm wondering if we should still do LifeLock or Xander, and who would you recommend if you thought that we needed something besides or instead of the ID protection that we have with our bank?
Well, here's the thing about a lot of the ID protection things at the bank. Basically, a lot of what the banks are doing are charging people for identity protection when the reality of it is you already have it. Chances are, the banks are going to be responsible for protecting your identity, and any losses of funds, they're going to be responsible to restore anyway. Now, if the bank's identity protection goes beyond the bank, the bank where you have your funds, goes beyond that, and they're willing to, they have a system by where they're going to go to bat for you to fight, to regain, and in fact, insure against losses that you might incur through other ways of identity theft, whether it's bank accounts or IRA accounts or anything like that. If they are willing to fight for that and restore that, either by way of the insurance that they carry and continue to fight to regain that for you, then it's an okay system. I just don't. So you need to ask if it goes that far, or is it just for the funds that you have at the bank? If it's just for what you have in that particular bank, then that's fine. I would keep it, but I would probably go to someone like a Xander Insurance and take a look at their plan as well. My
understanding is that they will go to bat for us, and they will take care of interceding and helping us get our credit back again.
Mm-hmm. Okay. Well, then, if you feel comfortable with that, then I don't have any problem in you, just having that, and I think that should be fine. Okay. So I think otherwise I wouldn't get rid of that one. I would probably add to it
and get Xander.
And I like Xander better than LifeLock, but either one of them are fine. But I would probably tell you to go to Xander.
Okay. Thank you so much. This has been a big help to me.
You're welcome. I sure appreciate the call, Marilyn. Thank you. Folks, for all of you that, Xander, is a good company. They're not on my website anymore. They elected not to sponsor this ministry anymore. I had some questions from from a number of listeners, and we couldn't. I couldn't. There's certain things I couldn't do for Xander or wouldn't do for Xander, and they no longer support the ministry. But though they're not supporting the ministry, they still have good products. So I'm not going to. So if anybody questions me on it, I'm still going to recommend them. But you won't find them on my website or anything like that. So I just throw that out there. If you do call them, tell them, ask them why aren't they supporting the ministry anymore. But anyway, I'll continue to tell you to use them, and I think they have a great product. Anyway, 866-300-9298, 866-300-9298. Let's take a look at the indice real quick. Kind of afraid to. The Dow's only down 189 right now, so it's better than the 202 it was a few minutes ago. But Dow's down 189 or 190. You're listening to American Family Radio Network. I'm Dan Celia, Financial Issues. We're going to get back to the phones, 866-300-9298. We'll be back after this.